Economic contraction in post-war history. But there are also significant challenges. Unwind their asset purchase programs and increase policy rates. Investors may choose to rebalance from riskier bonds back to safe government bonds. Loans. Many Asian borrowers were able to avoid currency mismatch and reduce rollover risk. Policy implications. Monetary policy normalization by major advanced economies. Escalating trade tensions, heightened geopolitical risks and new forms of financial intermediation. All pose challenges going forward for both advanced and emerging market economies. How can policymakers rise to these challenges? Concluding remarks. We have made great progress over the past 10 years in overcoming the GFC and its aftermath. Luis de Guindos, Challenges for Bank Profitability. Speech by Mr. Luis de Guindos. Vice President of the European Central Bank, at the OMFIF City Lecture, London, May 1, 2019. On the real economy. Equity by 3. This recourse to ring fencing takes a narrow national perspective. While both national and cross-border consolidation options are potentially viable. The key consideration for financial stability is that the combined entity should be able to successfully execute the merger. Resulting in a bank that can sustain profitability in the long run. Stephen S. Poloz, opening statement before the House of Commons Standing Committee on Finance. Opening statement by Mr. Stephen S. Poloz, Governor of the Bank of Canada. before the House of Commons Standing Committee on Finance, Ottawa, Ontario, April 30, 2019. In addition to concerns about global trade and oil prices, we have continued to watch how the Canadian housing market is adjusting to the combination of provincial and municipal housing policy measures. The revised guidelines for mortgage lending, and past increases in interest rates. Ali Rane, Bretton Woods at 75, what is new with the international monetary system? Remarks by Mr. Ali Rane, Governor of the Bank of Finland. At the panel discussion on Bretton Woods at 75, what is new with the international monetary system? In the context of the IMF spring meetings, Washington, D.C., April 12, 2019. ***** Accompanying slides of the speech. Your Excellencies. Ladies and gentlemen, 1. As we are celebrating the 75-year anniversary of the Bretton Woods system, let me start by noting that fostering economic and financial stability has been and will continue to be the key objective in developing the international monetary system, as reflected in the establishment of the Bretton Woods system in 1944, and more recently, underlying the adoption of Europe's single currency, Euro. My home country. Finland, is a case in point of a small, open economy in search of a stable monetary regime. Throughout the 20th century, Finland had just one currency, markka, but several changes in its monetary regime, ranging from frequent devaluations to literally cutting large value banknotes in halves. Eventually, we decided to join the European single currency. Euro, 20 years ago. This has greatly enhanced stability, but also brought challenging adjustment needs. Learning by doing. In 2016, after realizing that Finland's labor cost growth had significantly outpaced that of our peers, an agreement was reached with the social partners that helped to narrow the gap of price competitiveness. To our main competitors, the Competitiveness Pact reduced unit labor costs by 6.5% in the period of 2014 to 17, assisted by strong global demand. The pact was an important factor underlying Finland's rebound from zero growth. To 2 to 3% growth in 2017 to 18. One might say, it's small country open economy macroeconomics in action. What Schumpeter said about a nation, goes today as well for Europe and for our economic and monetary union. What happens to our money, is a reflection of the state of our union and its economy. In line with Schumpeter's unbeatable logic. Such policies that make the euro area more robust and its growth stronger will strengthen the euro's global role. The most pressing institutional reform is the completion of the banking union and creating a single capital market for investment, not least for sustainable finance. This should be supported by economic reforms in the EU member states. I also think there is a need to strengthen the external representation of the euro. As evidenced by the developments in the wake of the global financial crisis. These are of course, issues to be solved between the European capitals. But there is a sense of urgency to make progress. 3. When posing the question what is new in the international monetary system? Because of these developments, it is reasonable to assume that the unconventional monetary policy instruments will stay permanently in the central bank's toolbox, at least in reserve. In my view, a review of monetary policy strategy is a sound way to prepare for these longer-term challenges. Last November, the Federal Reserve announced it would launch such a review. The latest update of the ECB's monetary policy strategy took place in 2003, before the global financial crisis and its ramifications and policy. Changes. I am glad this option is now discussed and assume that the ECB will conduct a review at an opportune time. In the relatively near future. 6. On a final note, let me just say one thing. As the international monetary system is built on trust. Current policy uncertainty and the erosion of international cooperation are damaging. To everyone. We need bolder joint efforts to steer the global economy towards a more sustainable future. Be it ecological, economic, or social sustainability. On Europe's part, I can only say that we keep the flame of global multilateralism alive. I hope others will stay, or join, on board. Thank you so much for your attention. Øystein Olsen, Management of the Government Pension Fund Global Introductory Statement by Mr. Øystein Olsen. Governor of Norges Bank, Central Bank of Norway. At the hearing before the Standing Committee on Finance and Economic Affairs of the Storting, Norwegian Parliament, Oslo, April 25, 2019. The report to the Storting on the Government Pension Fund provides for, among other things, the Possibility of investing in unlisted renewable energy infrastructure within the environmental mandates. Embracing FinTech speech given by Dave Ramsden. Deputy Governor Markets and Banking Innovate Finance Global Summit 2019 Tuesday, April 30, 2019. Introduction. Thank you for the opportunity to be here today and open the second day of this important global Summit, speaking on behalf of the Bank of England, as the Deputy Governor with responsibility for FinTech. Financial services might evolve over the next decade as part of the bank's Future of Finance Project 6. And analyzing everything from the potential role of big techs in financial services to the implications of open banking and PSD2. Second, as well as renewing RTGS, we, alongside Pay. Finance is amongst the first sectors to deploy AI at scale. Ladies and gentlemen, in 2018 the Bank of Italy continued its capital reallocation. A process that began with the reform of the bank's ownership structure, Law May 2014. Managing reserves. In our legal system this is implemented through the right of ownership. The Council also announced that it would assess the possibility of taking further measures to ensure that the banking system had the liquidity necessary for the smooth functioning of the monetary policy transmission mechanism. In 2019, the balance has fluctuated significantly, but has remained on average at the level recorded at year-end. The closure of the last 10 territorial service units, TSUs, which were set up on a temporary basis in 2015, marked the completion of the plan for the reorganization of the bank's branch network that was first implemented in 2008. Capital. Monetary policy in the interests of the country as a whole. 111th Ordinary. General Meeting of Shareholders of the Swiss National Bank. Thomas J. Mr. President of the Bank Council. Dear shareholders, dear guests. A warm welcome to you all to our annual general meeting. Protracted decline in global interest rates. To explain to you why the negative interest rate is necessary. I need to take a broader perspective and look back at the past quarter of a century. The level of interest rates has fallen markedly worldwide over this period. Chart 1 shows that the nominal yields on 10-year government bonds in Switzerland, Germany, and the US have been declining since the 1990s. There are various factors behind this downward movement. The first of these is the success central banks have had in their efforts to combat inflation. After the negative experiences with high inflation rates in the 1970s and 1980s, at the beginning of the 1990s, many central banks started striving to achieve price stability. Inflation subsequently fell. And so too did the rates of interest on savings accounts and financial market yields. After all, if the money on a savings account retains its value thanks to inflation being lower, the interest no longer needs to compensate. For any erosion in value, lower inflation and the attendant decline in the level of nominal interest rates are essentially a positive development for households and companies alike. A second explanation is the decline in real rates. That is to say, nominal rates of interest adjusted for inflation. Chart 2 shows 10-year government bond yields in Switzerland. Germany and the US adjusted for consumer price inflation in those countries. The decline in real interest rates worldwide is attributable to various reasons that have been studied and analyzed extensively. In simple terms, we can for example say that the demographic shift has played a key role. With an aging population tending to save more in light of longer life expectancy. Moreover, the slowdown in productivity growth is curbing the potential return on real investment. Thus diminishing the appeal of investments in fixed assets such as factories. And equipment. If intentions with regard to saving outstrip investment plans, the real rate of interest has to come. Down to restore the equilibrium between supply and demand for capital. Monetary policy amid low interest rates. What does the lower level of interest rates worldwide mean when it comes to conventional monetary policy?